Hello, this is Andrew Abraham. I am a trend follower, and I just want to point out some interesting things about trend following versus so many other websites and get-rich-quick and sites. This is a site called Trading Markets, and it's interesting to read some of the articles. But my point is like this: people are looking for the tips, locking in games with G3 apparel or there's all different strategies. But the thing is, my main point is people are looking for answers. And the thing is, you can have the answers yourself. The real reality is, once you learn to trend follow, the potential to grind out positive returns over long periods of time are really at your disposal. When I look on YouTube, I see different searches for like e-minis or day trading and things like that. And what's fascinating is how many people want to or believe that they can get rich trading e-minis. I mean, here, this one, 46,000 views, 52,000 views, 32,000 views. The reality is it's very, very, very difficult trading. And the fact is, very, very few people are consistently successful trading e-minis. The reality of trading is that most traders fail because they don't have the discipline or the patience to make it work. What I've found that works for me is trend following. I've been trend following now going on 18 years. And what makes trend following, let's say, not easy, because it's not easy. I mean, you're going to have big drawdowns, you're going to have extended periods you don't make money. But what makes it, I guess, palatable is the fact that everything is automated. I have an exact plan of what to buy, what to sell, how much to buy, and I know exactly where my exits are with a profit and with a loss. And it's all automated. It's very, very simplistic. I'm taking low-risk bets. I've learned over the years how to think like a successful trader. I don't have a problem having 2 or 3 or 4 or 5 or 6 or 7 trades in a row don't work. And that's the reality. I mean, you see some of these websites that talk about accuracy, 100% accuracy, 80% accuracy. It's just not reality. I mean, with trend following, you can have many, many trades that don't work and be extremely profitable because you had several trades that did work and you had the patience to follow them and let them run. Pretty much, this is what trend following does. Let me give you an example. On the chart exemplifies what I'm just talking about. When you trend follow, you're going to have many, many small losses. This is the key, is to make sure that the losses are small. You can see you entered here, exited here. The trade didn't work. You entered here, you exited here. The trade didn't work. Small loss. You can see you enter here, and then you have the patience to ride it. You have an exact plan. Basically, you have 2 stops here. You had a hard stop, which was a breakout trade, and the stop was X periods ago. And once the trade started working, you followed it. And you follow the plan. The plan is to use an average true range stop, which is based on the volatility, and then you exit here. And it was a tremendous run. This is what trend following is. It's not easy. Many trades don't work, but it gives you a propensity over time to compound money. I'm going to show you. Let me continue about the realities in trend following. If you're going to notice, these are just a list of trades. This is a Canadian dollar trade. These are hypothetical, and hypotheticals have a lot of inherent implications that really, there's a lot of problems with hypotheticals, but just as an educational try to understand this, what we're trying to do is to give you an idea. In the trades, you're going to have most of your trades don't work. You have a third of 1%, 20 basis points. You have a trade here that works less than 1%, another trade that was -6. Then you have a -4, a 1.8 trade that did work. Here another example is 0.2 that you lost on. Here you made 2.8%, lost 0.6, lost 0.8, made 1.1, lost 20 basis points. But then what happens? You get lucky. You didn't do anything different. but you stumble into some other trades that end up working. Like on this trade, it was 12.4%. That 12.4% offsets all these other small losses that you have. But I want to show you another idea that's going to be shocking to you, how you can have all of these small losses in a row. Another reality to be very aware of when you're trend following is you're going to have multiple losses in a row. You're going to have 3, 4, 5, 6, 8, 10, who knows the number, in a row. But what you're going to notice is they're all relatively small losses, except this one. And what I usually do is I like setting my losses. I don't want to take bigger risks more than 1%. But what happens here is all we can really do is also control our risk. But what happened here is there was probably a gap up here, so we lost almost 2%, minus 1.9. This is the reality of when you trend follow. As much as you try to monitor the risk and measure the risk and adhere to the risk, we're not totally in control. Things can go limit up, they can go limit down, you can have gaps. But what you can see from this chart is you're going to have multiple losses in a row. You're going to have some bigger losses than you really want to. But then on the last chart, you're going to have some big profits that you stumble into. But what's also interesting, I want to point out too here, is the number of contracts in this. They change. This is 5, 3, 4, 1, and 2. It's all based on the risk per trade. And what the difference is, we're talking about position sizing. When I can put on more contracts, from my entry to exit, I had a smaller risk. And for my same percentage risk, I could put on more contracts. When you have a greater position sizing, you have a greater potential to make a lot of money. So that's one of the other keys of success in trend following is position sizing. You're going to learn all these ideas in my courses. And I'm here to help you, to teach you, and be your mentor. Trend following is not easy. There's many, many issues. There's many drawdowns. But the fact is, you can overcome these, and over time, you stand the potential to compound money, like I have. I mean, as much as the past performance is not indicative of future performance, we're dealing in human emotions, greed, fear, and trends appear. And we have to stay in the game to be able to partake in those trends. And we have to mitigate our losses as best we can. We try to mitigate them. And that's all we can do is, and I'm going to put in parentheses, try. Because here we tried, and we still had a bigger move than we anticipated, with a gap or a limit up. But this is what trend following is. It's not easy. You go through a lot of periods that are aggravating, but everything has aggravation. Everything has risk. Trend following has risk. And if you can't take the risk or you can't follow a plan, I'd suggest you don't even start.